Hey everybody, good morning. It's 8:10 in the morning and it's Friday the 18th of November 2022. This is our OPEX week. We had VIX that expired a couple days ago. We have NDX and SPX, not the weekly options, that are going to be expiring here in about an hour and 20 minutes. And then, last but not least, we have our PM expirations that are going to be expiring at the end of the day today. We also have, lots of other things going on. But what I'd like to do is I'd like to take a look at the S&P 500. I do have kind of a view on Bitcoin that I want to talk about at the very end. So if you just hang out for a little bit, I will talk about our good friend Bitcoin here at the end. Before I get into all of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and just giving my opinion on the market. The chat should be open, and I'm keeping an eye on that. If you guys have any questions or comments or anything like that, feel free to throw that into the chat. All right, let's go ahead and move on into the chart. So what I want to look at here is our view on the S&P 500, just talking about some areas of confluence that we've been kind of keeping an eye on for a while. So from the bottom, we were talking about this. We've been talking about this for a while now here. We've got from the bottom here down at 3,500, we're counting this as kind of like the end of a wave. And then, of course, we are in a corrective pattern so far. You can look at this as sort of like a rising channel. It's kind of like a bear flag. This is not a bull flag from what I can tell so far. So looking at this, I've got, three waves here to correct a wave A, and then A, B, C down into wave B. So we got three waves down into wave B, and then a larger, A, B, C going into wave C. And just to kind of talk about this here, the pivot points on this, I've kind of hidden them so you don't see them, but let me move this over so you can see where I've got this. Our trend line, you can see a dominant pivot low, dominant pivot high, and we've got our pullback, right? I'm pulling this back here. And just to point out the fact that we did make the 100% target almost exactly. If I zoom in on this, you can see that we hit that zone almost to the point. So we're calling that a completed correction. Zooming back out, we've got 5 waves down, 3 waves up, and then this structure right here doesn't look super fantastic. What I'm counting this as is an A, a B, and a C. So looking at this as an A, B, C, it could be a W, X, Y. It could be we don't have 5 waves. We could count this differently as more of an A, B, and then a deeper C. One way or another, I'm looking at this as to be the completion of this pattern. This could also be seen, I suppose, as a triangle here. So again, we have this A, B, C, and then a little D, E that still doesn't really match up super well. But at the end of the day, we are still counting this as a corrective move before we have a larger move up. Okay, and we've had that move up here. From here, I'm counting 5 waves up. So far, we've had 3 waves down. I'm going to go ahead and zoom in just a little bit. I'm going to go down to a 15-minute time frame now that we're here, focusing on this larger move up that we've had. And again, we've got this dominant pivot low down here. We've got this dominant pivot high up here, which is where these fib levels have come from, right? Okay. So again, we've seen this move up. We've seen a little bit of a correction here. So basically looking at this as, from here, we've got a W, and then we've got an X, and then we've got that last move down here to wave Y on a lower degree. So that gets us down here. But now that we're here, we're looking for a move up to wave C, right? So we've been talking about that wave C going up as high as, and you can see I've got it labeled here at about 4150. If we get there, and when we get there, I believe that's going to be the end of that move. There is a chance that we don't get there, and I want to talk about what it would take for us to, what it would take for us to reject there, what that would look like. But for now, looking at this, what we would really be looking at here is from down here, we've got a 1, 2, and then we've got a 1, 2 working on the 3, and then 4, 5. And then into wave 3, and then 4, and wave 5. And again, what I was talking about was a little bit of subdivision from right here, a 1, a 2, working on 3, 4, 5. That would be on a lower degree, and that would finish that move to get us up to that target of 41.54. And this is on ES, which would really equate to about 41.40 on the S&P 500 cash index. If this doesn't happen, right, if we can't get above a certain level, I'm actually going to keep this on here because this is what my primary is. That gets us up there to wave 5, potentially by Monday or Tuesday next week. I don't think it's going to happen today. If it did, I would be very, very surprised. I guess what I should point out is at 9:30 in the morning, I believe we are going to be pretty close to 4,000. I think that's very, very possible that we do get up to 4,000. So let me pull this up over here. Looking at options activity for today's expiration, I very much doubt we're going to get above 4,090. Right? I very much doubt even that we're going to get much higher than about 4,020. There's already some options activity in about the 4,015, 4,020 range. So that's why I think that it's going to be very hard for us to get up and above that. Now, if you're a bear, and I'm a bear, but I still have to recognize when I think that the prices are going to continue to move a little bit higher. But if you're a bear, what you're going to be focusing on is this right here. So we've got this dominant pivot high, we've got this dominant pivot low here that I'm going to pin, and I'm going to put my golden zone template on here to point out where we should be seeing a rejection. So again, we had our dominant pivot high, dominant pivot low. We should be seeing a reaction here at the 618 and the 65. So here inside of our golden zone, that's going to be at about 39.99, 4,000, and could be again as high as about 4,001. If we reject from there, I do think it's fair to point out, let me do one more fib pull before I say what I'm about to say. Dominant pivot low, dominant pivot high, and let's get this pullback. And I want to pull the 1,236 and the 1,618 on here, trying to get that as close as I can. And let's get all of these on here. So we've got this 1,618 up here at about 4,010. Now that's beyond the 618 and the 65. We're seeing some rejection, or at least a little bit of a reaction at a minimum here at the 1,236, and that's at about 39.90, 39.91. So there is some confluence for a potential for a rejection here. We do commonly get to a 1,618 on a rejection, right? And we do tend to see that as a corrective target very frequently. What I will point out is I want to actually kind of rewind a little bit to show the importance of that 1,618. And I know we saw this on the S&P. What I'm curious on is if we saw this on the ES index, on our ES futures. Dominant pivot high, dominant pivot low, and the retrace. It doesn't look like we saw this on the futures, but I know that we saw this on the SPX index. It did correct to the 1,618 before it continued higher. So now that we're here, again, I do believe that we're probably going to open SPX as close to 4,000 as possible. I do believe we're going to be very, very, very close to 4,000, which would mean that this move up here to the 1,618 at about 4,010 at 9:30 in the morning would be perfect. Would that be an area that I would be interested in shorting? It actually would be. Because if you're a bear, like I am, I try to get into positions to the downside. Even though we've been in a little bit of an uptrend, it still looks pretty corrective overall to me. If we get beyond 4,010, much more than 4,010, if we break this level here at about 4,015, we're talking about like a 5-point stop. That's really not that much. So I'll take a 5-point stop on an entry at 4,010 for the potential for the downside play, which would be pretty significant. Our upside, we still have about 150 points potential to the upside, but I'm interested in trying to get into a short swing position at about 4,010. Again, keeping a tight stop loss, so understanding what your risk is there, to try and take a move to the downside, and then we'll see what that reaction looks like before we make any decisions. So just a real quick point on what I'm talking about on getting into these specific points for rejection play. Let's just point out really quickly a little play that I took yesterday. So I'm going to get another fib pull here. I had this dominant pivot high here, and I had this dominant pivot low, and I saw us rejecting at the 618. So that's right here. I'm going to go down to a 3-minute time frame and go back to what occurred yesterday and why I took the trade that I took. So first off, let me see if I can go back into my history on this. Because yesterday I was talking about, going short. I think it was a short position that I took at 39.57, 25. I don't remember exactly what it was, but I was getting short right around here. And then what I ended up seeing was basically a push up here at 39.62, and then it came back, and then I saw another push up. So up here, I got into another short, and it must have been at 39.61.25 because it was right where this candle opened and closed. I took a short here, and then I got out of that position down in this general area at 39.40. Okay, so we were at 39.40. I did a little bit of a Q, not a Q, but a question to a poll to our group, and I said, hey, the price is down here at 39.40. Should I realize these profits or should I continue to hold? And I always preach that if you see profit, especially if you see significant profit, and seeing a 20-point move on futures, I mean that is pretty significant depending on your size, because every point is significant amount of money. So it was, you need to close that position. So I did, and it went down to 39.30. And, was I sad about that? No, it was only 10 points. I made 20 points. But then look at what happened from there. We saw this big move up. And again, we saw a rejection here at the golden zone again, a rejection here at the golden zone again. And it just continued to consolidate below this golden zone. And you see, we saw this pullback, and then it pushed through. And so now here we are. And we've already talked about where the targets are to the upside. We're getting closer to our target. I think that more than likely the S&P 500 is going to open the day somewhere around 4,000. And that's going to be the deciding factor on really what's going to happen over the next 3 to 4 trading days. If we start to see a sell-off at the open, and it's going to be a significant gap, right? So we closed yesterday right around here, and if we do happen to open at 4,010, that's a 48-point gap, right? What's going to happen there is really going to be deciding what's going to be happening over the next couple days. If we get a rejection from there and we go back and basically immediate gap fill within the first hour, well, then I think we're going to start to see a more significant drawdown. But if we don't gap fill within that first hour, well, that really opens up the view. Again, going back out to the 30-minute here, that opens up the view that we're going to be, going up here to this fifth wave target to complete wave C, in the next few days. Okay, so that's what I've got on the S&P 500. I did say that I would go and talk a little bit about Bitcoin. So I'm going to go ahead and do that. I'm going to go to Bitcoin. I'm going to go on Coinbase. And what I want to point out is the fact that this looks compressionary. This looks like it doesn't look good. It doesn't look good. So this is what I pointed out to the group earlier today, and I actually put it out on Twitter as well. So down here, dominant pivot low. We've got another low right here. I'm going to extend this guy. Okay? So we've got that. Now, what I also want to point out is from here, we've got something like this going on, and I think this is important. I'm going to change the color of this a little bit, and I'm going to kind of reduce the intensity of it because this is kind of on a lower, a lower structure. Okay, so from here, looking at this, what I believe I see is a structure that looks very, again, compressionary. A, B, C, D, and is E in? I mean, it could be. It could be we go down for the wave E, right? But from there, I believe we're probably going to see a move to the 786 of this wave here. Okay, so let me get my 786 on here. Let me remove the 618 and the 65. Let me get the 786. And I don't see it. I'm going to use this guy down here, 0.786. And that would be a move up here. So that would be up here to about 17,619. So looking at this from down here, A, B, C, D, and then we go up for wave E. Now, really it's going to depend on what that wave C looks like. But a couple things that I'm going to point out here. Let me get this tagged appropriately. And again, assuming that that the S&P 500 tops out, say next Tuesday, right? Just kind of like looking at this, it could be that this is going to extend out a ways, right? This would look okay. Then we just get our D and our E out a little ways further, right? So looking at this is really what the path I think Bitcoin is probably going to take. We're going to get this E. Sometimes it goes deep. A gap fill today would probably do it, right? And then we're going to see this last move, right? That's going to take us up here. And then we go down for wave D, 3 waves down, and then 3 waves up. We get up here to wave E, and typically it does like to overextend to trap people, think we have a breakout before it moves lower. Okay? Now, my timing on this could be off, but I think the structure is valid. We're seeing basically 1, 2, 3 waves up, 1, 2, 3 waves down, 1, 2. We're working on that third wave up, and if we get that and we start to reject, this starts to become more realistic, right? So our target to the upside right now is going to be sitting right here, which would create a lower high at about 17,600 after we created a higher low. So again, compressionary. It looks to me like we are compressing, and after we finish the compression, there's going to be a release of pressure. And the way that this is forming, it is right after we had a big downtrend. We're going to see that retrace. Then that pressure to the downside is going to be what is released if I'm right. So we're going to label this red, and we're going to give this a nice solid line. We're going to make it nice and big so that we can see it, because this would be the path. Now, what would the target be for if something like this were to play out? Okay, well, the way that you measure this is we're going to use our trend-based fib extension tool. We're going to try and hit the top of this as close as we can. We go down here to the bottom, and then we're going to find our retrace. Now, wherever that wave E is where we're going to land, and then from there we're going to be taking a move to the 100, which happens to be down here at about 12,000. It's going to be down here, 12,675. Now, is that actually going to happen? Well, I mean, this has to all play out first. What we've got here has to play out first. Let me fix that, because that's going to be the top part of that wedge. So a lot still has to play out. Let me remove this so it doesn't intrude. A lot of this still has to play out. It's still pretty early on. We're right in the middle of what I believe is going to be a compressionary wedge. And again, I do believe we are going to break up a little bit. We're going to get up here again to about 17,600, then back down. Again, this is going to be next week, potentially, down to about the 16,400, then back up above 17,000, probably closer to 17,300, 17,400, and that's going to probably be the top, and then that's where we're going to go down here. What would invalidate this? Well, the big thing that would invalidate this would be a violation of this high right here. If we were to get above that high right there, then that would invalidate the wedge completely. That would basically make this whole thing invalid. Something else is going on. We'll have to kind of see what happens from there. But just to be completely open and transparent with you, the first thing that I would do is, actually what I'm going to do, I'm going to go to a different chart because I want to preserve this. If I needed to look at an alternate scenario for Bitcoin, right, after we had this low, if it did happen to take out this high up here, what I would be looking at is a channel, right? So so chart geometry is something that is super important. So I pull this out, take it out, and then go up to that high right there, and that would basically be what would be my next view, right? So again, we've got this move up, we've got this pullback, and if we did break through this high, the next area to be looking for is wherever this top rail is. And, you know, if it did happen to happen by next Tuesday, right, so we were talking about maybe Monday, Tuesday for the stock market to create that move up to 4150 on the S&P futures, that would be Bitcoin being at about 18,600 or so. That would be at the top of this rail. So that would be the next area that I would look for if that level that I pointed out here at the 786 gets taken out, and especially if that pivot at 18,150 gets taken out. So we've got two important levels that we got to get through. I think that 786 is going to be that first level of defense. It's going to be a first level of supply. Next level is going to be all the people that bought Bitcoin up here that are going to be looking to sell. And of course, you've got tons of people that bought Bitcoin on this move down that are going to be looking to get out of their position, because we have been trading below, basically for the last 9 days. We've been trading below these prices where lots of people were buying, right? But we came down here, we started to do a V-shaped recovery, and we were met by resistance, rightfully so, because of what was formed right here. Okay, so lots of resistance is being created by this structure right here, and now you've got these guys here that are also underwater as well. They're going to be looking to get out of their position because chances are pretty good they're pretty bearish right now. So we've got a lot of this to contend with, and I haven't even started talking about moving averages, and I'm not going to get into that right now. But with the big moves down that we've had, we've got a lot of moving averages that are above us on our higher time frames, which is also going to create resistance as well. All right, guys, that's what I've got on Bitcoin. That's what I got on the S&P 500. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share. We'd love to have you around. If you need access to our Discord, you can find all of that information on BitDoctor.org. If you need access to our education, portfolio management, Elliott wave theory, Fibonacci, channels, geometry, how indicators are created and how they work, that's all available inside of our Discord. Trade ideas, both equity and options, spreads and futures. You can get all of that inside of our Discord. And also, if you need access to our Wave Master Indicator, which we didn't talk about too much on this, but you can find how to access that on our website as well. And that's all on bitdoctor.org. But last but not least, wherever you are in the world, I hope you're having a good day, good night, good evening. Have a great Friday, and we will see you all out in the interwebs. Take care, everyone.